Plugs, you better check and go ask on my city about. Had to slide a nigga.
Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. Yes, it's been a while. March 3rd, 2020. Shout out to my man, the Tech Geek, one of my YouTube members. Thank you for the support, man. He wanted to hear the baby off the rip. This guy, the baby, is hot right now. I hope he's taking advantage of it, because he is one of the hottest rappers right now on the scene. I don't listen to him too much, but I try to keep up with what's going on. What's going on, people? Welcome to another episode. Hope everyone's doing well today. Man, it's going crazy right now. We got the 10-year below 1%. Federal Reserve came out earlier today with a surprise 50 basis point cut on the rate, as if that was going to do anything to stem the effects of a coronavirus, a pandemic. This is where I don't understand where we are in America right now. I think we're at a point. I think we'll look back 100 years from now and laugh at the hubris that the leaders of this country have. It makes no sense. They think, or at least maybe not. Maybe they don't think. Maybe they're just looking out for themselves and their buddies on Wall Street, right? They don't care anything about the 70-year-old that's trying to retire or is living on fixed income. When you have a 10-year rate under 1%, I think I saw that 0.96% before I started recording. It's just crazy, man. You know, they need to be doing fiscal stimulus, not monetary stimulus. They need to be giving money to small businesses. They need to be injecting directly into the economy. But of course, that won't help the rich first, right? They want it first so that the money that you get is worth less by the time you get it. The trickle-down effect, right? Let the people at the top get the money. They'll go buy the capital, hire the people, and all that stuff, which does happen. But unfortunately, by the time that money gets to you, the purchasing power is 10-20% less. I mean, I'm exaggerating, but you get what I'm saying. Over time, it is that much. But you know, it just makes no sense where we are in America. I'm very disappointed in leadership, Trump, CDC, like everyone has dropped the ball. So let's see if this can change. But today we are going to be looking at the effects of this rate hike that we saw from the Federal Reserve on cryptos. We did see a spike in Bitcoin's prices, but it did hit a sell wall at 89, or I should say 8.9K, almost 9,000, hit a sell wall, so couldn't sustain that rally. Let's see what happens from here, but I don't know, man. I really think that, unfortunately, cryptos will sell off as well. It will continue to sell off because in a panic, people aren't, you got to understand this, people. Bitcoin and cryptocurrencies are risky assets, right? They're not a safety haven. They're not, they're very volatile, right? We can't look at this point right now. I'm talking about today, not in the future, pie in the sky, hope this, hope that. I'm talking about right now. Bitcoin right now is not a safe haven asset. It is a risky asset. It's a risk on asset. In a moment of crisis, you're going to see sell-offs of all risk on assets, all risky assets, from, stocks, cryptocurrencies. You're going to see bonds be purchased, so that means if the bonds are being purchased, the price of bonds are going higher, the yields are going lower. That's how bonds work, is inverted. So when you see the yields drop on bonds, that means people are piling into bonds. So we got to keep that in mind here. I don't know if other people are telling you that in the crypto space, but I'm here to tell you the truth. So we'll have to see, how that all pans out for us in the short term. Long term, though, I think once risk on comes back, Bitcoin cryptos will do very well. It will outperform all other asset classes, in my opinion. Anyway, Huobi. Well, it's a lot of drama around this Justin Sun takeover of the Steem blockchain. It's crazy, man. This doesn't look anything different than Wall Street. I'm gonna be honest with you. There is no difference here than what we see on Wall Street, and this is pretty sad, I would say. But hey, I mean, when you're purchasing things and when crypto becomes a business, this is what happens. This is what happens. So people are upset at how things are panning out with the Justin Sun takeover of the Steem blockchain. We'll take a look at some of the details on that. Some very unhappy people there. And then lastly, another Bitcoin ETF bites the dust. And, AMB Crypto poses a question here. This author, is an ETF really necessary? No, it's not necessary at all in cryptos. At all. So let's see what they have to say about that. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. And this episode is brought to you by PrimeXBT, one of the better cryptocurrency exchanges out there, in my opinion, and really that's because they allow you to trade more than just cryptos. You can trade stock indices. You could have made a lot of money today and even yesterday. Shout out to all the Robinhood traders who couldn't trade yesterday. But PrimeXBT, stock indices, commodities, forex, and crypto, check those guys out. You actually can get up to $100 if you use the link in the description of this video. You'll get a $100 credit for trading. PrimeXBT.com. So let's take a look at this first article out of Cointelegraph. We've got Bitcoin spiking on the Fed rate cut, but it hit a wall. It hit some area of resistance, guys. And what does that tell us? You know, we got to think about that. And as you can see, the heat map, I mean, we're down 2% right now. Bitcoin, $8,682. Ethereum down 4% to $222. We got Binance down 2.7% to $19.36. Litecoin down 1.7% to $60.50. And we got EOS down 9% to $3.61. XRP is also down 2.8% to 23 cents. Was that 30 cents at one point? I mean, all of these coins were way up at one point a few weeks ago. But hey, this is what we have here. I think people are finally realizing what is how the correlation or lack thereof will be in a situation when we have a crisis. At least the immediate reaction for Bitcoin. But yeah, it's saying that the price of Bitcoin made a severe drop in the past week, similar to the heavy drop down in the equities markets. However, equities made a strong move yesterday, relief rally, but today, U.S. Fed had a 50 basis point rate cut. Not only are the equity markets showing strength, but a similar bounce is also being seen in crypto markets as the price of Bitcoin rebounded from $8,400 to all the way at $8,950. But are the crypto markets finished with the retracements, or is there more to come? So as you saw, there was a big spike with Bitcoin right as the rate cut came out. It definitely knocked us out of our short. We were short. Man, we were short, and definitely tapped us out on that one. Later, though, did a full reversal. So, however, minutes later, the volatility starts to kick in for the markets, resulting in a deep wick and massive movements to the downside. Not only was Bitcoin hopping around severely, but the same can also be stated about commodity and equity markets. So it looks like Bitcoin is holding the 21-week moving average as support. The weekly chart of Bitcoin is showing clear support at the horizontal level between 8,200 and 8,400. That is the 21-week moving average. However, after last week's candle, there's not much in favor of the bulls. A large bearish candle is inducing further downward pressure, it says. So what do you guys think? Let me know in the comments below. Are we heading lower? Are we heading higher? I think we're heading lower. I'm gonna be honest with you. I think we're heading lower, and I think we actually put our shorts back on for Bitcoin. We got knocked out. I think we went back short. So we'll see what happens here. And the latest drama with Justin Sun. Man, Huobi Exchange responds to Steem network takeover by Justin Sun. So it just kind of goes over what happened. You guys don't know what happened. Here's a short breakdown. So Justin Sun basically purchased Steemit.com, a decentralized Reddit-like platform, earlier in this year, receiving a huge amount of pre-mined Steem tokens along with that. Steem blockchain depends on delegated proof of stake consensus system where users stake tokens with witnesses for governance protocols. The higher stake tokens the witness holds, the higher amount of control they hold over decisions made on the blockchain. So once Justin Sun bought Steemit, the community was afraid that giving such huge stashes of tokens to him might give him too much control, and so in a bid to limit his power, the community decided to hold a soft fork. But that's where the issues began. According to top crypto influencers and other enthusiasts, Binance, Huobi, and Poloniex used over 84 million Steem tokens to vote for an account presumably linked to Justin Sun, giving him power over the blockchain. So much for decentralization, right? Now, both Justin Sun and Huobi have come forward to defend the actions of the centralized exchanges, claiming it was for the safety of the Steem blockchain. Sounds like our governments, right? According to reports from Justin Sun's tweet, hackers froze over 65 million Steem tokens on February 22nd, leading to a difficult choice by the developers. He further said, "We double confirmed with lawyers, and we're told this was definitely a criminal activity from the hackers who froze over $10 million worth of Steem and threatened to destroy the assets. The risk of nullifying the hashtag Steem network puts every Steem holder's interest in danger." So how do you guys feel about this? Is this the right decision? Or for the sake of decentralization, do we just let everything crash and burn? And that's what I think over the past few years, I've come to the realization that we will be acting in a Pollyanna manner if we thought that we will have a day where it's fully decentralized, 100%, right? It's going to be on a scale. It's going to be some scale of decentralization that's going to have to be there, or centralization, I should say, that will have to be there in order to have safe gates, right? But it's just about how much control. And I think that's the $1 trillion question. And I think that's the hardest thing that blockchain will have to overcome and achieve, is figuring out that perfect mix between centralization and decentralization. Because I mean, in this case, what else would you do? You know, what else are you going to do other than circumvent the situation by taking these drastic measures? I don't know. You guys let me know in the comments below. Do you think this was the right decision by Justin Sun and the other exchanges to take over Steemit for the sake of the community? Last article, AMB Crypto. Yes, another Bitcoin ETF bites the dust. The latest proposal, it says, to bite the dust came from Wilshire Pheonix, a New York-based asset management firm. After the rejection news broke out, the firm claimed that it was very disappointed by the SEC's decision, as it had left no stones unturned to meet compliance standards and the expectations of the commission. So you can only imagine they spent millions of dollars to try to get this through. To no avail, unfortunately. Or fortunately, depends on who you are. It goes on to say, however, this rejection may not necessarily be an end to all such endeavors. During a such segment on CNBC's ETF Edge, Chris Hampstead, Director of Institutional Business Development, claimed that in spite of the latest rejection, this will not be the last time the market hears about a Bitcoin ETF proposal. He goes on to say that at some point, when market demand, investors' demand pushes the pendulum to a certain area, they will probably take another look at it and have a different kind of consideration. Well, I'll tell you this much. You ain't seeing no ETF no time soon with this coronavirus on our plate. I mean, I think you're going to see historic crashes in the stock markets in the next 2 months because we're so over levered. Any small thing, and this is a big thing, but any small thing that catches the Federal Reserve and all these people that are trying to manipulate and keep this stock market up, any small thing that came out of left field was going to prick this bubble. And now we have a situation where coronavirus is a big situation. It's a big thing, and it's something that you can't just fix right away. You know, it may take 6 months. It may take I hope it doesn't take a year. If it takes a year, oh my God, we can see 50% cuts from here. We can literally be back in the teens on Dow Jones index. So that's when I'll start really getting into stocks. If we get back there, it's way overvalued right now, way overvalued. So let me know your thoughts. Do you think the ETF situation is still something that can happen in the near future? I personally don't think so. I think we're years off from that. But again, that's just my 2 Satoshis on the situation. Let me know yours in the comments below. And again, shout out to my man, the tech geek, for the song request today, the baby off the rip. And make sure you guys like, share, and subscribe, and click that bell to receive more videos like this if you found them informative. I'm out of here, people. Holla!